Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas, markets analyst at FX Pesa. So as you all know, today is the first day of the month. We are officially beginning the month of August, and the markets are quite entertaining. We are getting some major trends forming. There is enough volatility. So I believe this comes with enough opportunities to trade in the global financial markets. So once you join in, kindly say hi in the live comment section, and these will confirm that everything is working just fine. So hello, Caspar George. Morning. Thank you for joining the session. Hello, Diana. Thank you for joining the session. So let's get this going. So I'll be starting with an announcement that on the market snapshot, now we have a key highlight article going out every Monday or Tuesday. And this will be covering the top things to know in the markets this week, basically confirming or summarizing what we go through in this market snapshot series. So this will be published on Kenyan Wall Street. So the article that you see here on my screen basically is written by myself, basically talking about the things we're expecting in the week. So last week, we had quite good activity. Both the US Federal Reserve Bank and the European Central Bank hiked rates by 25 basis points and indicated that they are adopting a data-dependent approach to monetary policy decisions going forward. The Bank of Japan, on the other hand, chose to hold rates steady at negative 0.1%, but also they surprised the markets with an adjustment to its yield curve control program from a limit of plus or minus 0.5% to a limit of plus or minus 1%. Personal consumption expenditures, or what you call the PCE, the report released last Friday, which is basically the Fed's preferred price gauge, slowed to 3% year on year in June, which led to the speculation that July's rate hike may be the last of this cycle. So we know that the Fed likes to follow the PCE price index. And if this is dropping according to Fed's expectations, then it is completely not necessary for the Fed to go for an interest rate hike on its next meeting on September. So since the Fed said that it's going to adopt a data-dependent approach, then the market is seemingly reacting to every data that comes in the markets, especially for the US. So if the data points to something that the Fed doesn't like, then in this case, we know the Fed will have to go for a rate hike. But then if the data comes in and is consistent with something that the Fed is looking to achieve, then in that case, we bet for a rate pause, and a rate pause basically implies a weaker dollar. So this week, the global markets is expected to be highly volatile as we expect an interest rate decision by the Bank of England Monetary Policy Committee. So the Bank of England is expected to hike interest rates by 25 basis points to 5.25% and release a monetary policy report on Thursday at 2 p.m. East African time. So the Bank of England Governor Bailey will then host a press conference 30 minutes later after the interest rate decision. So we know that the UK has been experiencing the highest interest rates among the G7 countries, with the last reading being 7.9% in June. So core inflation hit that one-year high of 7.1% in June, and this is hurting consumer spending in the UK. So as a result, there is an increased speculation that the Bank of England may go with more rate hikes up until they get to the 6% level. This might be consistent to getting inflation back to the 2% target. So the Reserve Bank of Australia was expected to meet this morning. So as you can see, here is the rate decision. We were expecting that the Reserve Bank of Australia would go for a 25 basis point hike, which would push Australian interest rates to 4.35%. But in this case, they disappointed by holding interest rates level at 4.10%. So this was a surprise. It wasn't priced in the markets. And I think that's the biggest cause of volatility this morning. So when you go to the AUD-USD currency pair, you will notice that the fact that the Reserve Bank of Australia chose to hold interest rates level and not go for a rate hike, this led to a surprise sell-off of the Australian dollar against the US dollar. And you can see clearly it has been a sharp drop. Hour after hour, we have seen the Australian dollar continuing to lose against the US dollar. So in this case, the overall expectation is that the price keeps on going down for the rest of the day. So if you are participating in this market, then the potential for another break downwards is quite likely. So for an immediate short-term target, we are looking at the low that we saw on Friday. So the market could continue pushing down up until it gets to the Friday's low. And if it breaks that level, then there's a potential for the downside momentum. And of course, we have quite a number of lows here that could be retested by this chart. So the potential that the market extends this drop all the way down here is quite likely. So around 0.66006. So for now, in the short run, on the 1 hour chart, I expect some continued momentum downwards to around the level of 0.66210. So that's it for the AUD USD, and of course, other Australian dollar pairs are expected to be weakening. That is the Australian dollar weakening. And going forward, we could be seeing more activity happening in the markets. So as per the economic calendar today, besides the interest rate decision by the Reserve Bank of Australia and the rate statement, we have a bank holiday in Swiss franc. So we expect retro to no activity from the CHF pairs. And of course, we will be expecting more news later in the day. So we have seen the nationwide housing price index in the UK coming at negative 0.2%. Slightly lower than expected. We were expecting a worst case scenario of negative 0.5. So commodity prices year over year in Australia came in at negative 23.5%, meaning that they are going down. Spanish manufacturing PMI came in at 47.8, showing more contraction and of course a drop from the previous reading, missing expectations. Italian manufacturing PMI at 44.5, still within contractionary zone, that is below 50.0, but slightly higher than the previous reading. European French final manufacturing PMI slightly up at 45.1, but still within contraction. German final manufacturing PMI, this seems to be the worst. Manufacturing in Germany is clearly in a recession at 38.8. German employment change, negative 4K, basically meaning that in the last 1 month, the German economy did not create any jobs. In fact, it lost jobs. So final manufacturing PMI for the entire Eurozone came in at 42.7 as expected. Italian monthly unemployment rate improved to 7.4% from a previous reading of 7.6. Final manufacturing PMI for the UK is what we're expecting next at 11.30, and then unemployment rate for the Eurozone before we look at Canadian manufacturing PMI at 4:30 p.m. So most important news for the day will be affecting the US, where we see a host of economic data. So at 4:45 p.m., we see the final manufacturing PMI for the US, ISM manufacturing PMI at 5 p.m., the JOLTS job openings, and of course, ISM manufacturing prices. So this will be very important as a leading indicator. That is the JOLTS job openings for the non-farm payrolls this Friday. So remember, this is the NFP week, and on NFP week, we have 3 job market data points that come ahead. So the first one is usually the JOLTS job openings. Then we get the weekly data point for unemployment claims. And of course, later on, we see the ADP non-farm payrolls before we eventually get to the non-farm payrolls. So the JOLTS job openings is basically a leading indicator on the employment sector in the US. So if there's more job openings, these are job advertisements, then it means that in the near future, there will be more hiring. On the other hand, if there's less and less job advertisements, then it basically means in the near future, the hirings will be much lower. So it will be a very important data pointing to the health of the US job market, and it might cause some volatility in the markets later today. So still on the article, there is more content. Besides the job reports, we also be looking at other things. So Wednesday, as I mentioned, the automatic data processing or ADP non-farm payrolls. Most important economic report for the US markets, investors and traders will be the official non-farm payrolls, which will be reported on Friday at 3:30 p.m. East African time. The report will show you the number of non-farm jobs. By non-farm, it basically means that we don't count the jobs created in the farming sector because they tend to be volatile. We also don't count the jobs created by the government. So we also be looking at the average hourly earnings change and the overall unemployment rate in the US. So the estimate is that the US created 200,000 jobs in the month of July. And of course, we're expecting that the average hourly earnings increased 0.3% in July. And this is in comparison to the previous reading where we saw 0.5% increase in June. So overall unemployment rate is expected to be steady at 3.6%, same as the previous month in June. So this will be very much important. Remember, the Fed is worried about the job market. In the previous meetings, they have been talking about a very hot job market, and this is becoming quite a challenge. So if the job market remains tight, basically means that more people will be having more income, and this can cause inflationary pressure. So they want the job market conditions to soften, which basically means that they want a higher unemployment rate, and these would be consistent with dropping inflation back towards the 2% target. So the earnings season is also very hot, with Microsoft and Google reporting better than expected earnings last week. So all big tech companies have basically shown better than expected earnings. So this week, we'll be looking at triple A, or three companies starting with A. First one will be the AMD, Advanced Micro Devices, a company that is majorly invested in manufacturing of semiconductors. It will be reporting its quarter two earnings on Tuesday after market close, which is today at 11 p.m. Then later this week, we'll be getting earnings from Amazon as well as Apple. This will be happening on Thursday after market close. So these earnings will shed more light on the conditions of the big tech. And if they are better than expected, then there will be renewed confidence in the stock market. So that's what is the major focus in the markets today. And of course, there's more to be expected. I don't think there's any major highlights in the markets. From the Financial News website, I don't think we have any major news. So only major news dominating the markets is the news this morning, where the Reserve Bank of Australia said that they expect inflation to reach 3.25% by the end of 2024. Inflation is to return to the target range of 2 to 3% by late 2025, which means that the projections are moving wider away. They are shifting the goalposts, and further monetary policy tightening may be required. They are not saying it's required, they're saying it may be required. So the cash rate was maintained at the same level, and of course, as we have seen, the Australian dollar weakened. So besides all the data we have gone through, I don't think we have missed anything. And now I think it's time we start looking into other things. And in this case, it's the favorite part of the presentation, where we tend to do some technical analysis to understand what to expect for the day. So let's start with the dollar index. Clearly, the dollar index is a key market indicator. So yesterday, we saw the dollar index trading sideways before strengthening later in the evening and eventually driving all the way up to the same level that we had seen on Friday. Then early this morning, attempted to go down before shooting up higher. And with a strong dollar, we know what to expect in the markets. Of course, we have pound USD extending this range. So you are tracking this area here. We don't have any major breakouts. So we keep extending our trend lines up until we have a proper break. So from the 15-minute chart, this is how it's looking like. A market that is basically trading sideways since Friday afternoon, yesterday, and then today. So not much of a volatility in this market, but this means that whenever a breakout happens, then it might make sense. So for Euro USD, this is what we are looking at. Market that was attempting to move this way, formed a break, went to the previous high, but then overall, if I were to remove everything from this chart, I just clean my chart here, I zoom out, then you'll notice that the price action hasn't been much lately. So one key thing we can say is that from this high to this previous high, we had some ranging movement where the market was just moving sideways. Then from this low to this other low, then it may indicate that we had a break and the Euro USD was moving back downwards. But still yet, it's not much of a momentum in this market. We want to see more action happening in these charts. So the USD JPY is the number one pair that you should be interested in. So the decision by the Bank of Japan to expand the yield curve control program from 0.5 plus or minus to 1% plus or minus basically mean that the Bank of Japan is ready to print as much money as they can to keep defending that peg. So as a result of that, what we are seeing is the US dollar continuing to gain against the Japanese yen. And if you choose any other pair with the Japanese yen, especially pound yen and euro yen, you'll notice it's a similar thing. You'll notice that all these currencies are making some pretty strong gains against the Japanese yen. So though the pound yen has stalled since last night, today I expect this momentum to continue, with one risk factor being the Bank of Japan intervening in the currency market. So if that doesn't happen, then automatically the overall trend continues the same way. So as long as the Bank of Japan keeps on printing more cash, then this is expected to be inflationary. And as a result of that, we should be seeing a much weaker Japanese yen. So my projections yesterday was that the Bank of Japan would hit 143.0. So we are just a couple of pips shy away from that level. That is 143.0. And if we break that level, there's still room for more upside. We could be seeing the market going for last year's high. So last year's high was around 1.5, 145.0. So if we breach this level, then we could be seeing the market moving even higher. So far, unless there was some kind of intervention happening in the markets, I don't see any likelihood of the Japanese yen strengthening. So only one factor that we are concerned about, the Bank of Japan intervening in the currency market. So if there's no such news happening in the markets, then the overall speculation is that the Japanese yen keeps on losing to the dollar as well as to other currencies. And it's quite an easy trade. So we managed to enjoy the benefits yesterday. I expect to keep seeing the same going forward. So the USD card pair made quite a drop. I remember projecting this yesterday, that now that the market has failed to move higher, there's a likelihood it would go back. So it went all the way down to an area we had predetermined as a support level. And then after forming rejection candlestick here, you can see the sharp acceleration back up. So if you're already on the bullish momentum trade, then we know that we are rapidly approaching an exit area. So if you are to use these trend lines here, we would know that the exit area is nearby. So if you have the long position, then this is an area to be interested in, look for an exit and a potential entry point if the market was to continue with this pattern. So the pattern overall is this. So this is the overall direction that the market is following. If we say this is an estimate of the direction the market is taking, then you know that once you get to this area, there's a potential that the market could pull back. So for now, if you're on the buy position, we're exiting here. And if you're not in the position, this is the area to look for an entry. The market will either do one of two things, either break and move higher, or bounce and move back downwards. So you just have to be patient, observe the price action, and then look for your perfect entry. So as for gold, we had this consolidation happening on the 15 minutes chart. I remember observing this. The market was holding the 1953 price level pretty strongly. So there was a big jump downwards, which was strongly rejected, and then the market rallied for the rest of the day. So now, after getting to this previous high, around 1972, the market started erasing the gains and has kept going down today. So what we are seeing is a very strong dollar in the market. And as a result, we are seeing gold losing to the dollar continuously. So now you can see a couple of candlesticks indicating rejection of lower prices. But then we know that this is not the real support. The real support is at 1953 and at yesterday's low, which was an extension below that. So there is a good chance that gold will find a support in either of these two levels, either 1953 or 1950. So the idea is to look for a bullish momentum once the market gets to either of these two zones. So there is a good chance the market will get to this area here, which is a major support level that we have been observing over time. And of course, if it breaches, then this area here. So gold is currently bearish. There's nothing to argue about here. So in this case, we just observe up until we see signs of bearish or lower rejection of lower prices. So as for now, we are seeing a market with a sustained momentum downwards, and I expect this continue through the London session. So as for Audi USD, we have covered this. So US Tech 100, we are seeing a huge wall happening around this area, basically implying that the market is unable to break this level here. So if it's unable to break this level here, then there's a good chance that it will be going back downwards. And one of the areas to target could be the 15,600 level. That is, if the indices decide to take a pullback here during the London session. So it's a similar case for the US 30, or what we call the Dow Jones Industrial Average. So the fact that we are seeing it drop, then yesterday's low seems like a nice area, just around 35,409. Then for US 500, what we call the S&P 500, similar case, I expect to see some further downside momentum. And of course, as I mentioned, yesterday's price low seems like a nice target. So as for Brent oil, remember, we had a break happening here. The market retested and moved higher, but it was unable to sustain the momentum upwards. And now we start thinking of the momentum back down. So now that the market was unable to break and continue towards higher prices, then a resumption back into the channel basically implies we are going back to the lower trend line. So in this case, it's so easy to go for a position here and target the area along the lower trend line. That's around 83.7. So this now becomes the new reality for Brent oil traders. So we could be seeing the price pulling back downwards and getting to the back to the lower trend line before proceeding higher. So as for the French 40 index, remember it had sustained momentum upwards, eventually got to the area that we are targeting here, which was the resistance level at 7,527. And after getting to that level, you can see the strong rejection that happened here. And now we could be seeing the price moving back downwards. So the immediate target is 74.30 and of course 74.04. So we could be seeing the market get into this area. And if it breaches this area, then this other area here, which was the previous area here, and of course the previous high here. So some interesting momentum happening this morning for European indices. So for Euro stocks, it's the same thing. We expect the market to drop sharply and get to the previous high of 44.12. And of course, if you look at the UK 100, also we may be expecting to see some further downside after the market was unable to form another higher high. So for Bitcoin, there was a big sharp drop earlier this morning. Here you can see some form of liquidity grab. So this was a support that was holding on quite well, around 28,860. So the market just shoots down below before making a recovery. So we could be seeing some further upside happening here going forward for the rest of the day. So that being said, I'll be checking to see if you guys have any questions and then responding to those questions. Hello, Paul. I can see Francis in the house, Iga Isaac, John Agena, Christine Karemi. Thank you guys for joining the session. Nice article. Thank you, Paul. I'll be sharing the link for everyone, for anyone else who would like to take some time and read the article. There is the link on the comment section. Please explain what a leading or lagging indicator are and their differences. Is ADP really relevant nowadays? Does it really tie to JOLTS and NFP? Yes, it gives a pretty good insight. Sometimes there's a miss. I remember the last reading for last month, there was a miss where it was more than double the expectation. Yes, it caused volatility in the market, so it was relevant, but it was not an easy indicator to use to predict the official data for the NFP. So when you talk about leading and lagging indicators, leading indicators are basically indicators that will tell you about what may happen in the markets. So lagging indicators will take data about what has happened in the markets. So I'll give you an example. When you look at the CPI as a measure of changes in price, it's usually reported after it has already happened. So we'll different, let's say, statistic bureaus will track prices across different parts of the country, and then they'll combine that data, process it, and then report that data. So by the time they are reporting, that has already happened. They are reporting past prices. So that's a lagging indicator. Most indicators will be lagging. Some indicators will be coincident and others will be leading. So a leading indicator will be telling you what might happen. An example is PMI data. So when you look at PMI data, you're basically going through different procurement departments. Let's say in Kenya, you go to different procurement departments. Let's say in the agriculture industry. So you go to Limuru Tea Farms, you go to Kapchorwa, you go to Mumias, and you get the orders that they have to deliver. So in order for them to deliver, they must engage in more production and so on. So once you look at the PMI data, it's telling you about the production that will happen in the near future. So in that case, that serves as a leading indicator compared to the CPI data, which is a lagging indicator. So leading indicators provide more value because they tell you what might happen in the future, whereas lagging indicators are less valuable. How can one get access to that article? I've just shared the link. Could you kindly include Audi JPY in your analysis, please? Yes, I'll check that. Are we really likely to see dollar strength strengthen further than the market expects? No, I expect at some point the dollar to continue weakening. I could be wrong, but that's my personal analysis. So US oil, whenever I do an analysis on Brent oil, it tends to mirror what's happening in US oil. So I just choose not to duplicate. So the question is on Audi JPY. I think we've already done the analysis on Audi USD. Audi USD, we just said that the momentum is so strong, we're expecting to test Friday's low. And of course, if we reach that level, then we look at this other low that we had seen here, which was tested twice. So 0.66006 seems like a nice target for a short-term intraday trade. So Audi JPY is the key question here. So with the Bank of Australia failing to hike interest rates, what we'll be expecting to see is the Japanese yen strengthening against the Australian dollar. So as I mentioned, for Japan, the currency is quite weakening. So I wouldn't be very confident with this particular asset because we are trading two assets that are weakening at the same time. So looking from previous levels, I tend to look at these areas here. This is one area that the market was finding support. I also look at this other area here. So they tend to be relevant over time. Same case we had this. The market finding resistance at this area here. So anytime any person who was buying this market, they knew that the exit was around the corner. So now if you're selling this market, you know the exit is around the corner because you're seeing these support levels layering each other. So if you didn't exit here, then the target is here. Of course, if you expect some further downside momentum, then you start looking at these previous levels. So for now, I expect the bearish momentum to continue, the Australian dollar to keep losing for the rest of the day. But then at some point for this particular pair, I know that the Japanese yen is also weak. So the Australian dollar could mount a comeback against the JPY. So that's a potential reality. So I would prefer trading a much stronger currency against a weaker one. So if we are trading the interest rate news from Australia, I would like to trade that weak Australian dollar against a stronger currency. So that's why I would prefer in this case to go for Audi USD, where I know the dollar index is pretty strong and closing into new highs. So in this case, going for a short trading position on Audi USD might make more sense compared to Audi JPY. What causes the CHF strength? Of course, there's just so many factors that can cause the CHF strength. I think the number one big factor that is contributing to the CHF strength is the monetary policy, and number two is the gold-backed currency. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session.